Top 5 stocks for July, baby. Let's go.
Let's do it. So we have it's obviously July 1st is tomorrow. So we decided to do our top 5 stocks for the month of July. Now, we just got done telling you there's a lot of chop that we're expecting to have happen in July. And I think that, just go into it with understanding that. But I think that these stocks could still end up doing very well and are worth scooping up, in my opinion, for the month of July. And I might actually end up getting into a couple of these as well, indefinitely. So my first one, I already kind of talked about it in the beginning of the show, is Apple. Apple, as I mentioned, is only up 2% for the year. And it's just very unusual for it not to be performing, at least with the market. It's been underperforming the market by more than 10% if you look at the S&P 500. So I think that Apple, over the last several quarters, has done nothing but just deliver on numbers and absolutely smash them. And, the stock has definitely started to move, and I think we could be on the verge of a breakout if we get up certain resistances. And if we look up, get up over certain resistances, I should say. And if we look at Apple, you can tell, I mean, it's been no secret this thing has been sideways for the last 9 months, which is very unusual. And so I think that Apple's time to shine is coming upon us very, very soon. They have earnings this month, and I think that could certainly be a good catalyst for them. But it's coming up on this resistance here at around 139, and I think that that's going to be a really important area. As you can see, it came up and tested that area back in December of last year, and have yet to retest that again. And so I think that that's going to be a really interesting area to see if we can get up over that. Now, it's marching towards that area already, so you might be asking yourself, well, this is bounced off of the 200-day moving average and hasn't really looked back since. Do I really want to buy in all the way up here? And what we always say about Apple is just, you got to own it. So I'd much rather own Apple up here and not miss out on this breakout. And if it does come back down, then I'm going to add to it anyway, because we just love to own Apple. So I like this one for the month of July. Fat Man Zoom.
My stock is going to be TAP, Molson Coors. We've alluded to it, like we touched on it, but we haven't really brought it to the table. But the reason why I'm bringing it to the table, for a couple of reasons. They have earnings July 28th, so I'm hoping that it's a good month for them leading into it. Their past 2 earnings have been pretty solid. So last earnings in April was actually predicted to be negative. It actually came in positive, which is always good for a company. They beat over 110% earnings per share. And it had a nice move up, but it's on a pullback. And from last earnings, it's down like 6%.
Yeah.
So I think this is setting up to be in a good situation come July 28th into earnings. I was listening to an interview on CNBC with the CEO, and he talked about demand. One of the other reasons I like it is Topo Chico. I talked to you guys about Coke, Molson Coors partnership with Topo Chico hard seltzer. Guys, I can't speak today. Let me slow down. Topo Chico hard seltzer. We love the brand. We love the branding. We love the product. And we think they're going to, or I think they're going to make a huge dent into the hard seltzer arena. And so I'm excited to see how that comes out. That still has markets to open into. So it's been doing really well. Their hard seltzer, I want to say he said like Canada, they're up like 300% on what they estimated.
Wow. Yeah.
Don't quote me on that, but I think that's what he said. Demand's really high. They talked about hospitality, and he was really bullish on hospitality, bars and restaurants coming back. They said 85% of the business has already come back. That bodes really well for the company and for just hospitality as a whole. Molson Coors is a sleeper. I think Topo Chico, we're going to have it once it comes to Maryland. It's not yet available. The bear case is they've had supply chain issues, but a lot of companies right now have supply chain issues. I think they're going to resolve that. I don't think that's going to be an issue. Watch out for Topo Chico hard seltzer. I think they're going to dominate, and this is going to get Molson Coors. As much as you can put Coors Light and Miller Lite on the map, they're going to put it on the map.
It's certainly been correcting since its 61.48 highs earlier this month, and I think that I agree with you, man. I mean, the numbers that we're seeing coming out of, and even though Constellation Brands missed earnings, their revenue beats were pretty telling, and I think that just kind of speaks to the industry itself. I like this at 51.50 if it comes back and retests that area. I think it's certainly likely just by looking at the chart, but I love the outlook here for TAP. My next one is going to be Fat Man Zoom Visa, ticker symbol V.
I love
and
that stock.
Visa is just been another one that is actually only up around I think 3% on the year. It's actually hasn't been outperforming the market, and so I like Visa here. I think that it's going to be one that is a sleeper stock as far as travel is concerned. And so I think when you look at travel, you think of things like Airbnb, some of the hospitality areas, hotels, that sort of thing. But Visa is going to do really well too. I mean, we've talked about how much we love PayPal and Square. This is going to be something that I think is going to absolutely crush it in a time where travel demand is at all-time highs. We're looking at, and you've been on planes, I've been on planes, they're packed. So people are going to be swiping their Visa cards everywhere. They're going to make a ton of money on all of the revenue from charges to businesses and that sort of thing. So transaction fees, all that good stuff. So I like Visa here, and I really like the chart as well. This has been following the 50-day moving average pretty good. I like it if it comes back on a dip around 231, and I personally plan to get in the Visa here as well if it does come back down to retest this 50-day moving average and holds up pretty well. I might be wrong on that, up 3% on the year, by the way.
8%.
8%. Okay. So, yeah, just 8%, which is still underperforming the market overall. So, I think that it changes course and actually will end up outperforming the market second half of the year.
Yeah, and before I get to the number 4 stock, all these stocks typically are on our watch list. We have a watch list that we send out that is free 99. It's free. 5 stocks that we're watching. We send out every morning before the market opens. If you guys are interested to get 5 stocks like this every single day before the market opens, click on the description. There is a link in there. Or I guess click on the link in description. But the reason why I bring up the watch list is because my next stock is Camping World, CWH. And I'm going to read you what I wrote in the watch list today. It was very simple and straightforward, and then we'll expand on that. So Camping World, first-time visitor, or did you have it on the watch list?
Yeah, I had it on the watch list. It was a year ago, but yeah.
So Camping World, one of the leaders in the RV world, has had a great run. It's already up 50% year to date, so that's certainly something to keep in mind. It is a little bit on a pullback. July will be a month to watch out for as it moves towards an expecting record earnings August 2nd. So July, hopefully, we'll see a little bit of a run-up. And then for those watching fundamentals and really believe in PE, it has a ridiculously low PE at 8.5. Brad, they've had 4 great quarters, and this one is just head and shoulders above the last. And I think we're going to see a massive guidance increase. I don't want to hold on to this long-term, but I think this is a great short-term swing trade. Watch out for Camping World.
I love Camping World, and I've loved it, as I mentioned before, for the last year. Last year, I liked it because, the safest way to travel and go on vacation was with an RV. And we saw RVs, they couldn't make them fast enough, literally. And so we saw things like Thor and Winnebago. They all did extremely well. Camping World is basically a dealer for those guys. So I like that. I also like it this summer, because there's still restrictions internationally. So even though things are getting much better here in the U.S., there's still issues internationally. So if you still want to travel and do it domestically, you can do it with an RV. Renting an RV or buying an RV, and we've seen obviously spending's going crazy. So people buying RVs isn't going to be like something that is going to go away anytime soon. I like the chart here too, Fat Man Zoom. Look at this. It's about ready to break up over the 50-day moving average as well. So if we see a breakup over there around 41.5, I think we see some really good continuation. Look at the way that this bounced off that 200-day. I mean, it just ripped right off of it. So I think that if we see this move up over the 50, should bode really well. Still sitting right in the middle of that RSI, so it's not even close to being overbought. I think there's plenty of room to run for Camping World as well. My last one here for number 5 is going to be OIH. Now, if you guys follow this channel, you know that I'm a pretty big fan of energy and oil and how that's been progressing. I do think that oil is still going to move considerably the second half of this year. We've talked about travel demand, all that good stuff. But the infrastructure bill is going to be big too. I mean, that's going to accelerate demand for energy. So there's just so many bullish cases, so many tailwinds for energy in general. And OIH is the ETF for oil services. So Halliburton, Schlumberger, those types of companies are in the OIH ETF. And so when you look at OIH, it's actually lagged the rest of energy. When you look at some of the XLE, which is another energy ETF focused solely on oil. The oil services ETF has lagged considerably, and we look and compare to the price of oil back in 2015, 2016, where OIH was. It was in the $400 to $500 range. Right now, it's trading at $230 a share. And so we look at the chart. It's still on this really nice trend here. It's on a pullback. It's actually at the bottom of this trend. I think that we see OIH actually have a really nice run. Watch for this 230 mark. It's had some trouble here around $230 a share. Neither one of us can talk today. What the hell? It's at the 230 mark is going to be that resistance there. So watch it. But I think that we could certainly break out, and I really like it at these levels too.
Well, there you guys have it. Our top 5 stocks for July. Make sure you hit that like in the comments. If you guys got a stock that you think is going to crush in July, throw it in the chat, in the comments, wherever you want. If there's one you want us to check out, let us know. But I'm excited about that list. I think it's going to do well.